everyone, my name is Christian Brooks. I am the owner of Brooks Bookkeeping and Accounting Services, a bookkeeping and tax firm that aims to empower and educate women of color entrepreneurs and small business owners on their business finances and taxes. I have a video today where I am teaching you all how to avoid getting audited by the IRS. So if you're interested, go ahead and hit that like button. And if you want to see more videos like this, hit that subscribe button. Let's get into the video. So let me start by saying this. There is no 100% foolproof way to make sure that your tax return never gets audited because the IRS does do random audits. Now, there is a way to make sure that you are not at a higher risk of being audited. And the number one way to make sure that you are not at a higher risk of being audited is to be honest. Be honest on your tax return. Make sure that you are reporting all of your income on your tax return. You know why? Because somebody else is reporting that income for you. If you have a W-2 job, your employer is reporting all of the income that you received. So if you received a bonus, if you received a moving stipend or whatever have you, your employer is reporting all of that. If you are self-employed or you do some type of independent contractor work, whoever you're doing that contract work for, they're reporting the income that they paid you. Even if they say they're not, they are reporting that income because as business owners, when you hire an independent contractor, you can write off that independent contractor expense. And the way that you let the IRS know that you've paid these contractors is by filing 1099s. The 1099s are going to tell the IRS how much you paid each contractor and who the contractors were. So if I'm a business owner and I hire contractors to do some specific work for me, at the end of the year, I have $10,000 worth of contract expense. However, in January, I don't file any 1099s, but I try to claim that $10,000 worth of independent contractor expense. The IRS is now coming after me. They're going to ask, if I had $10,000 worth of independent contractor expense, why didn't I file any 1099s? So at that point, I'm going to get in trouble and I am going to potentially have to pay taxes on that money. So I'm going to cover my butt and make sure that I don't have to pay taxes on that money. I can write that off. And the way that I cover my butt is by filing 1099s for every contractor that I paid. Assume that every piece of income that you are getting is being reported to the IRS. The second way to decrease your chances of getting audited by the IRS is to make sure that your income is being reported properly. So you want to make sure that your income is being reported on the proper forms. So you have your business income. If you are a LLC, a sole proprietorship, is being reported on Schedule C. You have farming income is being reported on Schedule F. If you have rental property income is being reported on Schedule E. Royalty income reported on Schedule E. You want to make sure that things are being reported on the correct schedules, but you also want to make sure that they're being reported properly. So do not put that you qualify for credits that you don't actually qualify for. Do not put that you qualify for deductions that you don't actually qualify for, because if your return gets flagged for audit, you will have to prove this stuff. And if you cannot prove it, you're going to have to pay back all that money. Now, this third practice isn't necessarily going to decrease your chances of being audited. However, it is going to prepare you in case you get audited. And it is to make sure that you are keeping meticulous records, making sure that you are keeping all of your receipts, you're keeping the necessary logs that you need to keep in case you get audited. Because when you get audited, the IRS is going to ask you for that information. They're going to ask you for receipts. They're going to ask you for logs. They're going to ask you for the bank statements. They're going to ask you for all of those things. If you're already doing meticulous record keeping, then all you have to do is send them that information. You're not scrambling around at the last minute to try to gather all of these documents together. The IRS can audit back as far as 3 years, so you want to make sure that you're keeping your records for at least 3 years. However, if the IRS has reason to believe that you have substantially understated your income, they can go back as far as 6 years. So make sure that you are keeping good records. I would keep my records on hand for about 7 years. 7 years is a good practice, but keep good logs, keep good notes, keep your receipts, keep your bank statements, have that stuff on hand. In case you get audited, you can send all of that information in. Okay, so let's say that you do get audited. What should you do? Well, the first thing that you should do is request your IRS tax record. Request everything that they're seeing. You want to see everything that has been filed on your behalf, including your wage transcripts, your tax returns, basically everything that they're looking at. You want to be looking at it too, so that you know how to defend yourself. You can't defend yourself if you don't even know what basis they're using to found their argument, and you have a right to see your information. So make sure that you are getting your tax record so that you can see what's going on, what are they seeing, and why are they saying that this needs to be audited. Next, get a tax attorney. Get a tax attorney who knows tax laws, who knows the tax system, who can argue on your behalf. If you can't afford a tax attorney, contact the Taxpayer Advocate Service. In order to contact the Taxpayer Advocate Service, you can file Form 911. Now, the Taxpayer Advocate Service is an independent service within the IRS that was set up to protect taxpayer rights. So you would contact them. You can contact them if you need help with audit, if you have a huge tax bill and you need some help with that. Basically, you can contact the Taxpayer Advocate Service for anything that you need as far as help with your taxes. They do have a phone number that you can also call. So do some research about them, and also research the Taxpayer Bill of Rights. Know your rights when it comes to the IRS. A lot of people are really scared of the IRS, and I completely understand being scared of the IRS. The IRS can do some scary stuff. If you owe them money, they can put liens on your house. They can go in your bank account and take their money back and take their money out, garnish your wages. They have a lot of power. However, you also have rights as a taxpayer. So make sure that you know your rights as a taxpayer. Now, if you requested your tax record, you sent in all the records that you have, you hired an attorney, or you contacted the Taxpayer Advocate Service, and the IRS comes with the decision and you don't think that the decision is an accurate representation of what you provided, the evidence that you provided, then you can file an appeal. You don't have to just sit there and take it. It is within your right to request an appeal. So make sure that you are exercising your rights as a taxpayer. If you have any questions, or there is a topic that you would like for me to discuss pertaining to entrepreneurship, small business ownership, or taxes, go ahead and leave a comment below, and check out my website at www.christianandbrooks.com/bookkeeping. I hope you enjoyed this video. If you find yourself stuck with bookkeeping or taxes, feel free to contact me. My information is in the description box below. See you next time.